Welcome, everybody, to Chrissy's Trading Desk. And on today's episode, I'm going to be reading a story time that I basically want to start learning trading. So I wanted to have like sleep tracks that I can fall asleep to every night to learn different things through a storytelling modality, and also where it's like hypnosis, ASMR, subconscious programming, this type of thing with the whole trading. So I am new to trading. I have currently only done technically what you would consider swing. I've been holding them for now. I really want to start to day trade, but want to get into learning these concepts. So if you are on that type of trajectory, please feel free to subscribe to the channel. And if you just want to give me some pointers and hints down below in the comments, please feel free. But again, I'm very new to all this. I'm learning step by step, just through videos, just through trial and error, through jumping into it, opening programs, asking ChatGPT, all kinds of different things to try to learn and absorb everything I can. And realistically, I know it's about understanding patterns, managing risk, and knowing when to enter and exit. So I want to slowly ease into all of this. So this will be the first sleep track. And I hope you enjoy this one and stay tuned for many more. And I also hope to be in the future live trading on here at some point, or showing you at least like recordings of my trades or talking about them. I don't have anything crazy on the screen now because I even have to figure out what is illegal for me to show. I don't show too much that I shouldn't be. So bear with me while I learn this and kind of go through this entire painful process, because I am not a trader by profession. I'm a resiliency professional and I've been in the business of managing risk. However, I'm not in the business of always being the one taking the risk. So the tables are now turning, and I'm hoping that my previous practices and all my training will lead me into a good position here where I won't look at it as gambling, or I won't know when to stop, or I won't chase things or try to attempt to get too many dopamine hits off of this whole trading experience. So without further ado, let's get right into this story time. Enjoy. Welcome. Tonight, you're going to let your mind gently absorb the language of the market. There is nothing you need to do, nothing to solve. Just listen. Your mind naturally recognizes patterns, and tonight you are beginning to train that ability. As you relax, your brain begins to quietly learn how markets move. Take a slow breath in and breathe out. Again, in and out. Let your body soften into the bed. Your shoulders relax. Your jaw relaxes. Your eyes become heavy. As your body drifts deeper into rest, your mind begins absorbing a new skill, the skill of seeing the market clearly. Now, let's understand the language of price. The market speaks through price. Every movement in price represents a moment where buyers and sellers meet. When buyers are stronger, price moves upward. When sellers are stronger, price moves downward. Price is simply the story of supply and demand unfolding over time. You don't need to memorize complicated formulas. You only need to observe the behavior of price. And as you listen tonight, your brain begins learning that behavior. Let's talk candles, the footprints of the market. Most traders look at charts made of candles. Each candle represents a small story. A candle has four important parts: the open, the high, the low, and the close. The open is where the price begins. The close is where the price ends. The high is the highest point reached. The low is the lowest point reached. And between those 4 points, the market reveals its intentions. If the close is higher than the open, the candle is bullish. Buyers were strong. If the close is lower than the open, the candle is bearish. The sellers were stronger. These candles are footprints left by the market. Your brain is learning to read these footprints slowly, effortlessly. Candles also have wicks. The wick is a thin line extending above or below the candle body. Wicks show rejection. They show moments when price tried to move further, but was pushed back. A long upper wick can mean sellers stepped in. A long lower wick can mean buyers stepped in. And over time, patterns begin to emerge. As you sleep, your mind begins storing those patterns, quietly building a library of market behavior. Now imagine a chart where price moves up and down. Sometimes price reaches a level and stops. It pauses. It reverses. It hesitates. These areas are called support and resistance. Support is a level where buyers tend to appear. Resistance is a level where sellers tend to appear. Markets often remember these levels. When price returns to them, traders watch carefully because history often repeats, not perfectly, but often enough to matter. Your mind begins recognizing these zones naturally. Let's discuss trends and structure. Markets move in waves. Sometimes the wave moves upward, sometimes they move downward, and sometimes they move sideways. But when price forms higher highs and higher lows, the market is in an uptrend. Buyers are in control. When price forms lower highs and lower lows, the market is in a downtrend. Sellers are in control. When price moves sideways between two levels, the market is ranging. Neither side has clear control. Understanding this structure allows traders to align with momentum. Your brain begins recognizing these structures automatically. Momentum is the speed and strength of price movement. Strong momentum often appears when many traders enter the market at the same time. This can happen during news events, breakouts, or shifts in sentiment. Momentum creates powerful moves. Traders often look for moments when momentum begins building, because these moments can create opportunity. Your brain is beginning to recognize the early signals of momentum. How about the idea of probability? Trading is not about certainty. No trader knows the future. Instead, traders think in probabilities. They look for situations where the odds tilt slightly in their favor. A setup might work 60% of the time, or might fail 40% of the time. But over many trades, that small edge can create consistent results. Trading success comes from good probabilities, combined with disciplined risk management. And as you sleep, your brain begins understanding probability naturally. Let's talk risk and discipline. Good traders protect their capital. They never risk too much on a single trade because even the best setups can fail. A trader might risk only 1% of their account on a trade. This allows them to survive losing streaks and continue trading long enough for probabilities to play out. Discipline is more important than prediction. Patience is more powerful than impulse. Your mind begins absorbing this calm discipline. Over time, traders begin recognizing patterns, not because the market is predictable, because human behavior often repeats. Fear repeats, greed repeats, crowds repeat the same reactions again and again. Charts reflect those emotional patterns, and the brain becomes very good at recognizing them, just like recognizing faces or recognizing music. The more exposure your brain receives, the stronger these neural patterns become. Tonight, your brain is beginning that process. So, this is subconscious training, and as you rest, your mind continues processing information. Neural connections strengthen. Your brain begins organizing what you've learned. Each night of exposure begins familiarity. Each day of observation reinforces those patterns. Learning trading becomes easier, calmer, more intuitive. Your mind naturally notices shifts in price behavior, and your awareness grows steadily. Let's make sure to enact a calm trading mindset because a successful trader is calm, patient, focused. They wait for clear setups. They do not chase the market. They do not panic. They observe. They respond. And they protect their capital. This mindset is forming within you. Your nervous system remains steady. Your thinking becomes clear. You approach the market with patience. In closing, now allow your mind to drift deeper into sleep. Your brain continues processing the patterns of price, support, resistance, momentum, structure, probability. All of these ideas are settling quietly into your subconscious. Each day you will see the market more clearly. Each day your pattern recognition improves. Your mind is learning the language of price, and it does so effortlessly. Now rest and let the sounds around you fade into the background. Your body relaxes, your breathing slows, and your mind continues to learn as you sleep.